Sandeep Bhatia, Executive Director and Head of Sales with Kotak Institutional Equity, joins us live from his Mumbai office. Sandeep, good morning. Thank you for joining us. What do you make of this week's price action? We corrected 100 points plus on Monday, and then yesterday we regained pretty much what we lost on Monday.
You know, we have seen tremendous flows. I think across the street there have been program trades running on Nifty baskets. I think there's also been a change in MSCI, and there have been some transactions which will go through from now till June on the back of these changes which are happening. So a combination of factors, in addition to the fact that we've seen massive easing coming in from Japan, has driven the markets. I think it's a fantastic opportunity for people who've been holding on to the banks and some of these interest sensitives where prices have moved up to book some profits.
So Sandeep, does it seem like this could be the start of a breakout rally and we are only going to see more or rather new tops in the Nifty?
No, honestly, there is no logical reason why that should happen. I think as far as what are the issues plaguing India are concerned, the macro numbers we saw on the current account deficit just 2 days ago, we know the fact that the political situation is still extremely fragile. I don't think the government is in any kind of momentum or is in any place where they can drive through a very strong agenda. From September onwards, I think everyone, including the ruling party, will be focused on the electoral calendar. So everyone's going to do a lot of politicking. So in that kind of a situation, I think any market rallies are just good opportunities to trade in, to trade out, and book some profits. That's it. I think the only thing that fundamentally will happen from here on till September, October, we believe is falling rates. I think the rally in private banks is clearly reflecting that. But as far as the public sector banks, they can't participate to that extent, essentially because eventually the pressure on NPAs will tell on their balance sheet. So I don't think we should lose sight of fundamentals just because the market moves up.
Sandeep, you're clearly pouring cold water on the market mood, whereas I'm with you when it comes to the fundamental, big picture. But do you think in a market where liquidity is the central theme, fundamental arguments will make very little sense, because those who've argued fundamentally in last 10-15 days, they've not made money?
I agree with you that, the stock prices can go higher and higher because more money keeps on pouring in. But finally, stock prices need to take reality checks. Stock prices need to look at earnings. Stock prices need to look at dividend payments. Stock prices need to look at what kind of free cash flows are happening. So are you telling me that, we can continue to motor on for any length of time more than a couple of weeks? I would not be in the camp. I think, yes, what you are right in pointing out that 2 weeks ago someone said this, and therefore this did not, move in the next 2 weeks. Therefore, that's liquidity is changing all arguments. And you can extend it, this argument is for someone who will live and die by the week. So someone who wants to have a longer time frame than that, there will be an issue. But, we have always been in the camp that some of the interest rate sensitives will move up, and that's something which has happened. So I think even the markets which is moving up is not moving up across the board. So even the market in its so-called madness, there's still method behind it. And the names which are going up are generally names which will benefit from falling interest rates.
Look at State Bank of India, classic example here, a franchise which will benefit because because of a low interest rate regime, and because of a low interest rate regime, they will be able to reprice loans and they will report a substantial jump in their profitability because the total income or the total profitability from the fee-based or from the government securities will only, improve. 24-26 for State Bank of India. Very, very powerful move. Sandeep, is there merit in still buying into State Bank of India? It's a good quality franchise, the biggest bank of India, and based on FY15 estimates, it is reasonably priced as well.
No, SBI is the only large public sector bank that we think that we should buy in. So to that extent, yes, we are always preferring private sector banks such as ICICI Bank or IndusInd. But yes, SBI is one name that definitely will be part of the same argument. The only thing one has to be aware is that somewhere in the middle, around September, there's a change of leadership there. So that's one event which always impacts public sector banks. But other than that, I think, yes, we like SBI on a fundamental basis.
Sandeep, looking at the inflation figures, what is it that you're expecting from the RBI this time around? And do you think an easing monetary policy is something that the market is already pricing in?
Well, if you look at the way the 10-year bond yield has fallen, it's gone from 7.89 to 7.45 yesterday. So clearly there's been some pricing in of that. I don't think the transmission of that has happened. Are corporates going to see significantly lower interest costs in the next couple of months? It's something which is not still very clear. But some kind of rate cuts will happen. Our own view is there will be a 50 basis point cut in rates in the next 1 quarter. So every 45 days we'll see a 25 basis point cut in rates. That's what we expect. After that, clearly it depends upon the inflation trajectory. We hope that the monsoon plays out well, which is good for food prices and will put downwards pressure on food prices, and therefore food inflation would be under control. If that happens, then we could see a further cuts in rates from the government, from the RBI.
Sandeep, is there a valid and a favorable argument for farmers also? Because whichever way I cut and dissect, the big pharma companies clearly have surprised with strong numbers.
Big pharma companies have surprised with strong numbers because some of the domestic sales side has surprised. So we saw that happen with Glenmark. We saw that happen with Lupin, and also some of the international export markets have performed well, likes of Dr. Reddy's and so on. Each of these businesses are very much different from the others. So if Reddy's is operating in Russia, Glenmark is operating in North America and South America. So markets are different for most of them. The only common market is India, and the Indian market, is growing at a steady pace, not very strong. Our view is that pharma is a good bet. We would think Dr. Reddy's is our top pick. We also like Glenmark at these levels. I think the one interesting pick, which will be Ranbaxy, it is going through a phase, I think, during this year where most of the issues that the business faced will be resolved. So the news on the settlement with the Department of Justice in the US is welcome, and I think by the end of this year, hopefully we'll start seeing FDA approve supply of drugs from Ranbaxy from some of its plants, which were under scrutiny. So if that starts happening, I think Ranbaxy is definitely going to be an interesting stock to watch for 2014.
Sandeep, what happens if global liquidity turns? Do you think then we could be really climbing down a very dangerous path? Because as of now, Indian markets are completely hostage to global liquidity.
Well, that's the first point I made, that the current account deficit continues to widen, and that is where the finance minister in his budget speech, the RBI in its various releases, and every market commentator has said that India is just mortgage its near-term fortunes to capital flows which are coming in the equity markets. So if there is a reversal of liquidity across the globe, there would definitely be a huge impact on India. So I'm not in the camp that we will see any such event happening in the next 1 year. I think global growth, especially in Europe and Japan, will need to be supported by positive and loose monetary conditions. So liquidity will be ample, at least for the near term.
What about the recent diesel price hike? Would that turn out to be credit positive for the oil and gas space, or do you think that's not much of an impact?
No, it's definitely going to have a huge impact, especially for next financial year, because interest costs on the working capital outstanding that these businesses run will start falling. So yes, it's a structural positive if this continues for the next couple of months for even the government's subsidy bills. So yes, these are positives. The only thing is that in India, any stock which is dependent on positive government action, suffers a huge discount, which is what is happening in the oil and gas sector. So while there is a desire to trade up in these stocks, and there is clearly a signal coming through in terms of government action right now. The continuance of those actions for the longer term is the question. So that's where these businesses always, see a drag.
But do you think ONGC is in a sweet spot, because the subsidy burden will go down, and if gas prices are increased locally, then they really could hit a jackpot?
Yeah, we like ONGC. Fundamentally, I think there's a significant earnings upgrade that comes through. As you correctly said, there's an earnings jackpot to be had at the end of this rainbow. So I hope this rainbow stays and we get there.
Right. Final question, give me a broader allocation of your current portfolio. Top 3 ideas where you are advising your clients that they should commit at least 5 to 6% of their capital.
I think Tata Motors is one business which we have liked. The interest rate sensitives, whether it's private sector banks or autos, are one space where the portfolio should be tilted. So in that space, we like Tata Motors, definitely. I think there's near-term tailwind even coming for Maruti. We could see significant margin surprises coming through this year. Everyone's hoping that from September, October, there's a revival in volumes. If that happens, that's further, fuel to the earnings. So that's clearly one sector, which is autos, where we are positively tilted. Other than that, oil and gas looks interesting. Both upstream, downstream businesses, ONGC, BPCL, HPCL, businesses which will hit significant earnings upside over the next 2 years if rational fuel pricing policies are continued. So that's one big sector. In the banking sector, we like IndusInd Bank. We would think that ICICI Bank at current valuations is extremely attractive. I already discussed SBI. So it's a combination of oil and gas, banking, pharmaceutical. We discussed Glenmark, Lupin, Ranbaxy. These are the sectors, and of course autos. That's where we are positively tilted.